You've always heard that you need to invest, but you don't know where to begin.
Don't worry, leave that to us. We've been teaching people how to invest for the last 8 years and have helped over 45,000 people get started with investing in a simple way. And now we've made the process even easier by creating a course that teaches you how to get started investing in 5 simple steps. And it's called our L.E.A.R.N method.
Before you invest, you need to 1. Look at your financial position. 2. Establish your personal goals. 3. Assess your investment options. 4. Research the best options for you. And 5. Normalize investing regularly.
With these 5 easy steps, you can start your investment journey with confidence and clarity. But wait, there's more. We've created templates and resources to help you take action right away. After this course, you will know how much you have to invest, your investment targets and timelines, and how to invest to achieve your goals. Register now at learngrowinvestclub.com.
Good evening, everyone. Hope you are doing well. All right, so this video is going to be a simple one, actually. All right, so the title speaks about how much you need to invest to make 100,000 in dividends, right? So I'm creating this one really to help persons who need to know how to calculate their dividend yield. Let's say they want to earn a certain amount of money investing. I'm going to break down the concept of a dividend yield and then show you how much you'll need to have to earn that specific amount. Now, we've actually done this in a previous video, so some of you might have seen that one, but I know not everybody watches the entire video, and so I'm doing this specifically for those who may want to just go right to it and have the information there available to them. All right. So I do have a poll. I'm trying out this new thing. Let me see if it works. So you should be able to see that. I'm not sure if you are able to click and answer it, but I'm trying to get a feel for the type of persons I have here on the live stream now. Are you dividend investors here? Are you trying? Because I saw a comment from somebody recently that I thought was quite interesting. So let me know if you can answer the poll that you're seeing on the screen now. If not, I'll find some other way to do it. So let me know. All right. Okay, perfect. So persons can take the poll. All right. So I'm going to leave the poll up for a few moments and then I will start the discussion around. Let me see which stock I'm going to use here. All right. And so I'm going to leave this up. I'm going to leave the poll up for just like 60 seconds at most. And then we take it from there. All right, so let me do that and that and that. Yes, I'm going to leave the poll up just for a little bit longer. And then we move on. All right. All right, so I'm seeing some responses in the chat. Thank you for that. Is that at a specific amount about monthly, quarterly, or yearly? Let me know. In terms of the how much to make in dividends, that amount, let me know if that's what you're asking. Roger, hopefully you're seeing the poll by now. Some people have already begun to complete it. I don't know how you see it on your side. Like I just saw the platform offers it, so I did it. I'm not sure. For those who completed it, let me know where you're seeing it while I get ready with my examples here, right? So somebody here says, I want to invest in Trans Jamaica. Is it the right time or am I too late? Richie, I can't answer that question for you. I mean, it's not a simple answer because of how we recommend persons invest, right? So it's never too late to start investing. You know, whether or not it's the right investment for you depends on a couple of things. So that's why that's not a straight answer, unfortunately. So yeah, I mean, I hope that helps, but you're probably looking for a little bit more. So let me see here. Okay, so persons are seeing it. All right, good. So in the meantime, you can let me know if you have any dividend investing questions, right? So I want to narrow the focus of the questions that you may post around dividend investing, right? So let me know what your questions are as it relates to dividend investing. I may be able to answer some other questions, but it depends on how much time we have, because this stream is going to be 30 minutes or less, right? So I'm just preparing some information to share as I explain the topic here tonight. So that's what I'm doing. So I'm going to share my screen in a moment, all right? All right, so Chess King Davis is asking for monthly dividend stocks outside of JMB preference shares. Any other options? I mean, I don't know monthly options. Honestly, I know twice yearly options or once a year options. So dividend investing in Jamaica, we don't have like REITs or so in the US that you can just get cash back monthly. Even bonds, they would pay you quarterly, preference shares quarterly, etc. So I know about quarterly. I don't know of any monthly options. If somebody does, let me know, and then we can probably look at that. But I don't know of anything like that. All right. All right. So I'm gonna break down how dividend investing works, how to calculate the yield, and it will get to answering the question of how much you need to invest to make 100,000 in dividends. All right, so we're going to get to that soon, but I'm going to break down how dividends work. All right. So again, our videos are tailored. Our videos on YouTube are tailored to those who are beginners, but we don't only do beginner content. We focus on beginners on YouTube because we don't know who's watching. We don't know their starting point, how much information they have, and all of that stuff. So we focus on a beginner level. Then we have different levels that you can go through as an investor. So we have our level 1 program, which is ideal for persons who are brand new to investing. You don't know where to start. You want to understand how it works and possibly get started. That's our level 1 course. The link is in the description of this video. It's completely free to take. It's over on our community website. If you master those basics and you're ready to take the next step, then we have levels 2 and 3 that you can learn more about within our community, right? But that's the context for which we do videos, right? So a lot of our videos now are centered around beginners because what we noticed, right? We used to do a lot more technical videos, a lot more in-depth videos, a lot more videos going through financial statements, talking about different things. And the feedback we got the most is that persons didn't understand, persons didn't know, how to interpret the information we're talking about, or they didn't know how to connect it to where they are. So we've shifted our focus to only, for like the last 2 years or more, we focused on beginners. So some of you may be watching this video and you're like, well, Jermaine, I'm not a beginner. I've been investing for a while. What is there for me? level 2 and level 3 is the answer to that. All right. So our content will be level 1 content. That's what we do on YouTube. And then if persons want to start, they take the free course. Then if you want to go deeper, our level 2 and level 3 communities are for you. All right. So let me explain how dividends work now. Right. So there are 2 ways to make money from stocks. You make money through capital gains or dividends. Now, I saw a comment by somebody recently on our YouTube channel, and let me read the comment because I thought it was interesting that the person said this. The person said, I really want a video on investing for capital gains for long-term in Jamaica because all I see as a beginner are videos on dividends, right? So the person's name is Memerbro1234. So if you're here, I understand you're paying, but again, I don't know who is watching the videos. I don't know your starting point. I don't know what you need to learn. So your feedback also helps. If you want us to cover certain topics, share it. But we will always try to create content that we believe will meet our audience where they are. And so I'm not going to make it too complex and then all we do is, give you a headache, right? So if you want to talk a little deeper, you can join our community because, of course, in level 1, there are persons at all different stages. You can ask questions there and somebody who's at that level can answer those questions for you. All right. So I'm going to focus on the topic now because it's been 10 minutes, right? So companies, and the reason why we start with dividends is that it gives investors a quick win, all right? So you don't have to be an expert to get dividends. Once you know how to calculate the yield and start earning, then it's something that can give you a quick win, right? So that's why we start with dividends as well, because everybody can get something back, right? Through dividends, right? Because capital gains are not guaranteed. So no matter what type of strategy I share, if I do a video now about how to earn capital gains on a particular stock, chances are by the time you watch that video or a few months will pass, that video may not even be relevant because the factors that allow you to earn capital gains vary from stock to stock. It varies on the month, on the season, on the timing. So many different factors go into it. That's why it's not something that we focus on teaching on this medium when you're just watching a video and we don't know for how long, right? So we cover that in level 2 for sure, right? So hopefully that helps, right? So companies, when they announce dividends, so remember it's not guaranteed. They usually go through a couple of stages, right? So dividends are decided on a board level. So the company will meet as a board and they will meet to consider the payment of a dividend, right? The reason why they have to consider it is that it's not guaranteed that it will be paid, right? So I'm going to show you this from Indus Pharma. This was released on March 11th. And it says, Indus Pharma Jamaica Limited wishes to advise that the board of directors has scheduled a meeting on Monday, March 23, which is today, to consider inter alia a final dividend payment for the 2025 financial year to the shareholders of the company, right? So they're going to consider it today. So by today or tomorrow, we're going to see a notice to see what their decision was. All right. Let me go to another company here. This is with Cinco Group. I think they paid a dividend recently as well. So I'm going to show you again here, right? So it says here, the Cinco Group advises that its board of directors will meet on Friday, January 30th, 2026 to consider a payment of dividend to shareholders. So you get the point, right? Companies meet as a board, they discuss whether or not it makes sense, whether or not they're able to, whether or not, whatever, fits into their overall strategy to pay a dividend to its shareholders. Now, after that, I think I have one more, Fontana. So let me see the consideration. This is before, so I think this is the consideration. Okay, please be advised that dividends will be considered at the board of directors meeting on Monday, May 26, 2025. All right, so you get the idea, right? Companies meet, they consider, and then at a later date, they make an announcement of the dividend, right? So let me go to Fontana, who they had the consideration, and then almost 2 weeks later, well, 2 weeks later, they made this announcement. The announcement says that Fontana Limited announces that at a meeting of the board of directors held on May 26, a resolution was passed to approve an interim dividend payment of 25 cents per share payable to shareholders on record as of June 10th, 2025. The ex-dividend date is June 10th and the payment date is June 25th, right? So this is the most important notice for you as a dividend shareholder because it tells you how much you're getting per share, and this will help with knowing how much you'll need to invest to make $100,000, right? So we can approach this multiple ways. I want you to understand that because it also comes down to your average price. So when I use these examples, I want you to understand that what I'm using is the current price, but it depends on your price, right? So for example, if you purchase a stock for a lower price, then the amount of money you will need to spend will be less. I want to make that abundantly clear, right? So as it relates to dividends, it's all about context. It's all about what the price of the share is, the dividend yield, and how many shares you have bought, right? Those are the things that matter, right? So again, I may be showing you this video now using Fontana as an example, and then 3 months from now, the price is different. It means the calculation will be different. It means the amount that you'll need to spend to earn 100,000 will be different. I want to make that abundantly clear before I continue, right? So I'll take questions shortly, by the way. So I see a couple persons on Instagram saying they didn't see the poll. Hopefully you're seeing it now, but I'm not sure you can take the poll on Instagram, unfortunately. So sorry about that. All right. All right. So after they do this and they say that they're going to pay an interim dividend, understand that sometimes companies may announce multiple dividends in a given year. So we're looking at Fontana's instrument summary page now, and I know that because it says Fontana here. If we look back in 2023, then Fontana announced a dividend twice for that year, right? I mean, the payment date in here was the 1st of January 2024, but in June and in December, they would have announced a dividend. All right. So sometimes companies pay multiple times. Sometimes they pay once per year, twice per year. It really depends on the profitability, the cash flow, and the priorities of the company. All right. So with as a dividend investor, you have to be clear as to where the company's financial position is to know whether or not they're likely to pay the dividend that you're expecting, right? Dividends are not guaranteed. All right. So what you usually want to do to calculate the dividend yield is calculate the annual dividend and the current price if you're not a shareholder, or your average price if you are a shareholder. All right. And I'm going to get into the example and show you the difference between the two. So we're going to use this based on the current price of Fontana, which is $7.47. And the annual dividend for 2025, which is 25 cents. But notice in previous years, in 2023, they paid 30 cents. In 2024, they paid 25 cents. 2022, they paid 20 cents, etc., etc. Right? So it really depends on what's happening in that year, how much they'll ultimately pay. All right? So this is trusty old Excel. Right? If you're new to this channel, then I'm sorry for you because it's all about Excel for us, right? So we noticed they said they're paying 25 cents per share. So we'll call this, dividend per share. All right. And then that is 25 cents. The current price is $7.47. So for us to calculate the dividend yield, all right, so dividend yield is the annual dividend divided by the stock price or as I said, your average price. All right, so that's your formula. Just understand that that's how it works. All right, so let me actually do it a little differently. Stock price. All right, and let me know if you have any questions along the way because I can go through it. All right, so that means we have the annual dividend amount here, which is 25 cents. So we have that. And then we have the current stock price. Now I'm using this because, for example, I'm not a shareholder of Fontana now. So I'd have to buy those shares at the $747 to get access to the dividend if that dividend was being paid right now. Okay. So that works out too. And because I get a decimal here, I can format it as a percentage and I can add that. So I can say that the dividend that they're paying is a 3.35% dividend. All right. And the reason why we calculate the yield is that it gives us an idea as to how the company stacks up in terms of dividend yield. So all dividend stocks are compared based on yield. And so the higher the yield, the more the company is known to pay out. But of course, it depends on your average price, because if your average price for Fontana is $12, then your yield would work out to 2%. But if you bought Fontana at IPO, then your yield would work out to 13%. All right, I hope you're seeing that here based on a calculation. So everything comes down to your average price. So that's important to understand that it depends on the price you pay. So for a dividend stock, the lower the price, once the dividend remains the same, the higher the yield. All right, because of course, let me go back to 747 here. If they paid 20 cents this year and not the 25 cents, then the yield also goes down. All right, so that difference in 5 cents brought it from 3.35 to 2.68. All right, so that's a big drop down. And of course, if they were to pay like a 30-cent dividend, then that yield would go up, right? But it would depend on how much in total the company is paying out and what their dividend policy is. All right, so the dividend policy, and you may see this in some IPO prospectus where they say, well, we're going to pay 25% on net profits or X percentage on net profits, or dividend policy is XYZ. So that is important to understand as well, because the company's dividend policy will determine the room that you have in terms of what you can expect. Because if the policy states that it's 25% of net profits and they only make $100 million, then they're going to pay 25 million out in dividends divided by the number of total shares outstanding, and then that would determine how much you're going to get. All right. So these things are important to understand and to factor in as a dividend investor, right? So it may seem like, I don't know if this sounds, complex to you. I'm trying to keep it as simple as I can. Let me know if you understand what I've been saying so far. So I'll pause here before I go to the calculation to see if there are any questions. Does this make sense so far in terms of the dividend yield? So let me go back to the 25 cents. And then it's 7.47. So for now, the dividend yield for Fontana is 3.35%. So we're going to use this 3.35% to calculate how much we'll need to use to get 100,000. All right. So let me know if there are any questions. I'll pause, before I continue here to see if there are any questions. All right. So Miles said following so far. Thank you very much. Ron says makes sense. I'm assuming it's what I said earlier. I appreciate that. This could be a part 2 video, then cap gains in the second part. Maybe. All right. Could you shed some light on the GOJ bond market coming soon? The bond market isn't coming soon. The way in which we can purchase bonds is what is coming soon. I don't know enough about it yet to speak about it in terms of the new platform, etc. I'm assuming it's going to be a part of JTrader, but I'm waiting just like the public is to see. All right. The beginner is me. Well, some days I feel like a beginner as well, so I get it. I mean, in the sense of making 100,000 if a company declares dividends right now, the amount I would need to invest. Oh, well, that's what we're gonna That's what we're gonna calculate here, sir. Give me 5 minutes, and we answer that question. All right. Been receiving dividend monthly from them. That's a gym. Oh, okay. So tell me what they do. Do they split up that 7.35%? Because that's a per annum, right? So you're getting like 0 point something percent per month. Let me know. Because the 7.35% is per year. So that is interesting. What are the 3 best dividend paying stocks? It varies depending on when you ask. The Knight says good work. Thank you for that. All right, so since I'm seeing no more questions, let me check IG as well. Wesley's asking, what do you think about Carreras as a dividend company? Are its returns to investors stable? How is their dividend yield? All right, so this way that I showed you to calculate it here, you can do that. Personally, for me, I don't invest in Carreras or SVL, but of course, the function of what we're talking about here is in dividend yield. You can apply it to any stock of your preference. So for Carreras, you go to their instrument summary page and you can do the calculation just like I showed you for Fontana. It'll work for any company. Simply Majestic Beauty says extremely complex. What's complex? Let me know. Am I being too technical again? I can hear, my wife saying I must use simple language. So let me know if I haven't been simple, guys. Hopefully I have been. All right. So I think the next part that I'm going to explain is going to be a complex part. So, oh boy. So let me just check on something here. All right, so I'm going to calculate the yield now. My issue is finding the dividend yields above 5% that are not in stocks outside of Trans Jamaica. That's I mean, is 5% your metric or is it my metric that you've taken from me? Let me know. I mean, my personal metric, Abigail might know and others might know, is 5%. So that's what I look for, but I also factor that in based on my average price. So when I'm planning to buy a stock, I'm carefully choosing my average price so that I can get the dividend yield I'm looking for. Because as you know, the prices of stocks fluctuate. So if I know that I'm purchasing a dividend stock, then I'm looking carefully to buy at a certain price, right? So that's going to be important here. But you raise a valid question for those of us who are believers, right? So yeah, all right. So let me just do a formula here. All right, so I mean, 6% might work too. So I think that you can have your standard, because here's the thing, and this is what I've said to persons, right? I think sometimes we can overcomplicate what dividend investing can look like, because you can just think about the fact that if you have, let's say your target is 6%, right? And you said that in the chat, right? Since you're borrowing my metric, I don't know why you do that. Your metric is your metric. If your metric is 6%, it is not a function of current yield. You also want to look at what is your current price, right? And I say, Michael saying Massey and GHL offer yields above 5%. There you go. Because I know that there are at least a few stocks that will pay you above 5%. But also, I want you guys to understand the context of my investment strategy. My investment strategy fits into an overall strategy. I'm not just investing in stocks arbitrarily, right? I've crafted an investment strategy over studying this thing for like 9 years now, right? So I'm sharing a piece of the strategy by telling you that my minimum is 5%, but it fits into an overall strategy, all right? So bear that in mind, all right? But Abigail, so again, so when you're focused on, Abigail raises a good point here, right? So the stocks are expensive, sure. As a dividend investor, you kind of have to determine if the yield is, if the income is important, the yield is the yield, right? Because regardless of the price for Massey, 3.35% or 6% or whatever the dividend yield is the dividend yield. So if you spend $1 million versus 5 million, 6% is 6%. So you have to factor that in as well, sure, right? But from an income perspective, then you're getting that percentage return on your money, all right? So there are a couple of ways to do this calculation, right? And I know some of you got a little traumatized by math in high school. And so please forgive me when I go through this. So this is a formula. So there are a couple of ways to look at it. The way that it's in my head is you can look at the dividend per share. So whenever that dividend per share is announced, you can say to yourself, all right, so I'm going to go back to this formula. I'm going to call this, option 2, and I'm going to show you an option 1. So let's say that I want to earn 100,000 and the dividend per share is 25 cents. I divide it by 25 cents. Let me do it as a formula. All right, so that works out to 400,000. What that is telling me is that I need 400,000 shares of Fontana to get 100,000 in dividends. All right, that's step 1. Hope that's clear. So if I need 400,000 shares, I now need to multiply those shares by the price, which is the 747, right? So this multiplied by the stock price here will tell me that I need to spend 2.9 million, of course, not accounting for fees, to get that dividend for $100,000, right? So that, of course, you need to calculate to see whether or not that makes sense for you. But of course, the way that I look at dividend investing is that the question you're asking yourself is that if you have this money, for example, in your savings account, are you getting if you have $3 million in the bank, are you getting $100,000 on it in 1 year? The answer is no, right? So now will opportunity cost, dictate that you do something else with the money? It may do that. And if that's the case, make the best decision that you can make. But I'm just showing you here that you can calculate and know how much you would need to spend based on how much dividend is being paid and the cost per share, right? That's formula number 1. Are there any questions with this before I move on to the next formula, right? Let me know. All right. I'm gonna wait. Hopefully you guys are not upset at me for, wanting to do math on a Monday after you've had a hard day's work. But yeah. All right. So I don't see any questions. I'm gonna move to the next one. All right. All right. So somebody said clear. Awesome. All right. So I'm gonna use formula number 2 here. I'm just gonna insert some rows here so you can see this, right? So the formula that I have here is the required investment amount. You put your desired income divided by the income yield. So that's actually like another way to do the same thing, because what I did was the dividend per share. You could also do it with the dividend yield, right? So your desired income is 100,000 divided by 3.35%, or let me do it by this so we can do a formula thing. And then we get the same amount here, right? So it's really, both will lead you to the same conclusion. But here's how you can now calculate how much you are able to get based on the factors that I show you, right? So for example, if the price goes down to $6 and the yield goes up, the amount you need to spend is less. So the higher the yield, and the lower the stock price, the less you need to spend. So I'm going to just, remove the rows that I don't need so you can see it a little bit easier, right? So let's use the example for another company so you can see this formula working more than one way, right? So let's go back to another example that we had here. So Wisynco is here. Let's use Wisynco as an example. So Wisynco's dividend last year was 46 cents and the stock price is $21.49. All right. So 46 cents and the stock price was $21.49. All right. So $21.49. That means the yield is 2%. That means I would need to spend $4 million on Wisynco shares to get to get 100,000 in terms of dividend from those shares. All right, so I have to spend more money, to the point that Abigail made in terms of Massey and GHL being expensive. It's really the price per share. So the higher the price, the more money you'll have to pay to get the same amount of dividend. Right. So let me also do it with the other companies that I have here. So I did it for Sterling Investments as well. So Sterling Investments, I think, pays in USD. So this is, let's call it, don't really like to use the USD ones because I have to convert. All right, let me skip that for now and go to Indus Pharma here. So Indus Pharma last year paid 13 cents and their price is $2.86, all right? So 13 cents and the price is $2.86. So that's a 4.72% yield. So if you spend $2 million on Indus shares now, you get $100,000, right? So depending on the capital you have, you can determine what's a realistic goal for you, right? So I saw somebody mention Massey and GHL. Let's look what those numbers are. So you notice once I have my formula, I can just pretty much switch in the different stocks. And so this is an exercise I go through to see how much money I'll need to spend to buy that stock based on the amount of dividends I want. So Massey paid, is this correct? Because I'm seeing this twice here. Is this a mistake or is this repeated? So for those who are Massey shareholders, did they pay dividends 5 times last year? Is that correct? So I'll have to convert from TT to JMD. Let me use GHL instead. I don't like the conversion ones because it'll take me longer. So $338 and the dividend last year was, again, it's in TT. All right, I can't escape it. So I have to learn how to calculate TT here. All right, so 23 plus 22 plus 21. And then in the earlier part here, they paid 57 cents. So that's a total of $1.23 TT. So let me find out how much is TT dollars to JMD. So it's 23 times 21. All right. So this will require some more nuance here. So again, guys, it's not my fault here, but the TTD exchange rate is 23.21, right? So 1 TT is $23.21 JMD. So GHL paid $1.23 TT. So that means they paid $28.55 in dividends last year, right? So we say the price is, well, $28.55. The price is $3.38. So it says here the yield is 8.45%. I don't know if that's correct, but that's what it's saying here when I do the conversion. So somebody's mentioned that they paid a special dividend. Okay, so there was a special one paid. Cool. So that's a 8.45% dividend yield, which means all you need is 1.18 million to get that 100,000 in shares, right? So let me verify that calculation before somebody, chooses to take me on. So 23 plus 22 plus 21 is 66, and 66 and 57 is 123. So $1.23, multiply the $1.23 by 23.21, and you get $28.55. That $28.55 divided by $338 is what I used here to get this calculation here. All right. All right. So Abigail, here's an option for you in terms of 8% dividend yield. So $1 million to get $100,000. All right. So I think everybody gets it. Let me know if this has been making sense so far. All right. So let me check IG if there are any other questions. Formula 1 is clear. Thank you, Mel, on IG. All right. All right. So I think I've covered it clearly. So using the formula that I've shared, let me share the formula one more time. So the formula that I've shared here is you take you look at the previous year's dividend. So all of the dividends that they paid for the last financial year. So in this case, GHL paid $28.55 in dividends. And we know that because we've converted from the TT dollars that it shows that they have paid, the current share price, and we're using the current share price because we're not shareholders, is $338. Of course, this does not account for your fees. That gives us a dividend yield of 8.45%, which is pretty good. And this formula, your required investment is your desired income. So in this case, it's 100,000 divided by the dividend yield. And so it's 100,000 divided by what's in E8. So the required investment is 1.18 million Jamaican dollars to earn $100,000. All right. So please test the formula just in case I get anything wrong. And so on and so forth, right? So I say somebody's about to share our website. Nothing wrong with sharing our website, but as investors, I recommend that you learn to calculate things for yourself, because sometimes a website can get it wrong. I've seen that, right? So you can please do share the website, but just understand that sometimes the websites can get it wrong too, because it depends on the data. So just like I showed the site there, where sometimes the dividend is repeated. So the website may pull information from it, not realize that it's a duplicate because it's an automated calculation. And so you you took data from the website, but it's not necessarily correct, and it's not the website's fault. All right. J Lux, excellent question. So depending on the company and where it's based, some of them you have to pay a GCT on it, meaning 15% is paid from the dividend, but it depends on the company. Some companies don't charge you, some do, right? Majority of them you have to pay the 15%, but for some of them you don't. So you also have to find that out from the company, right? So that's important to note as well. All right. All right. So Memer bro, you're here. All right. So have you made any videos on investing for long-term capital? I called out your comment earlier. It sounded like you were, wanting us to do some videos on capital gains. So I'm happy that you're here. What I was saying in response to your comment is that because there are so many different ways to make capital gains, because there's not one way I can say to you that will work for every stock. What I was saying is that what we try to do is focus on topics that can be applied by 90% of the people who watch it, right? So we want to be able to accommodate the majority, because I don't know your skill level. I don't know where you're starting out. I don't know how much capital you have. So if I focus on a capital gains strategy, I may not be meeting you where you are. And two, that could also veer us off into the direction of me giving you advice for that particular stock, which I'm not allowed to do, as I'm not a financial advisor. All right. So there's also that little gray area to navigate, where if I show you how to make capital gains from a particular stock, you take that video and you go and invest in that stock expecting to make capital gains, and you don't, you may come back and say, Jermaine, how you tell me if I do this, I get 10% or 20% here? That's not something that we want to do. So in our level 2 program, we teach you a process by which you can identify it, and then we give you all the nuance and the context and the framework around it. So that's a little bit more a better way that I like to give that type of information, instead of just on YouTube where I'm not sure where everybody is. So hopefully that answers the question, the comment that you made on a previous video. But we can at the very least go over some ways. I'll try to do that for you, but just understand that it won't be an exhaustive thing, and understand that it may have a lot of nuance and qualifiers, because there are different things that cause different stocks to grow in price. All right. So yeah. So SDC, go ahead and share the site. I don't know which site you're referring to. When you said this website, go ahead and share it. And we can see here. Techie says that might take a while to achieve, though. That's why I changed my approach from having a bunch of stocks and start focusing on a very small amount and build them out one at a time. So my personal approach is to invest in 4 to 6 stocks and no more. Right now, between Rennie and myself, we have 5 stocks. Well, is it 5? Is that a 5 or 4? So we don't have too many stocks either. Persons with 15 stocks, 20 stocks, 30 stocks. I don't know how you manage all of those stocks. Like, I don't know. You need to tell me, those with 20 stocks, tell me how you do it right now, because I don't know if you're practically managing those stocks, or you're just kind of hoping for the best, right? Dark Paw asking, did you do the show on unit trust? No, I'm gonna do that inside the level 1 community, as I promised, soon. All right. I am completely new to this. Might just invest in a course if I can't learn it on my own. Well, I mean, so here's the thing. So I would start with the level 1 course, because here's the thing. We're not going to insist on anybody spending money to have to learn something. That's not our approach. But what I would say is start with the level 1 course, sure, but the short version, I'll give you a very short version of this, because again, I don't want it to seem like I'm unwilling to help. But stocks increase in price due to an event or trigger or catalyst, you might call it. So that catalyst can be different depending on, for example, if it's an IPO, if it's an existing company, if it's like, there's so many different ways in which a stock price can move. So for example, let's take West Indies Petroleum. Stock price went up. They're listed by introduction. There was limited supply of shares on the market. Because of the limited supply, that drove up the price because there was demand. And so the price went up almost 2,000%. That particular context of how that price went up would not apply to all the other stocks that did not list by introduction at that particular time. Another example here, Atlantic Hardware, before Hurricane Melissa, was trading at 88 cents. After Hurricane Melissa, went as high as $2.24 because of the hurricane and the fact that investors thought that stock would have a profitable year, so the price went up. So you understand that there are different things that apply to different companies and why the price goes up. So it's not something that is easily said, do this and it will work. So the short version of what Jamaica Politics TV is saying here, work the catalyst and get out before everybody knows. Now I don't know if it's simplified. It's a simplified thing of what I'm trying to say. So yeah. So we were just running on vibes, but we're getting it right this year. Okay, Abigail, right? So I mean, vibes, that's not a thing anymore. All right. So we don't manage them. The 30 stocks are there just being there. We're gonna join L.E.A.R.N level 2 and get our house in order. Yeah, man, that will help for sure. Yes, I hope that was helpful to your Mima, bro. As I said, I don't want to leave you without a response, but just understand that it's a nuanced thing, right? So you have to kind of train yourselves on what to look for. And there are certain key things you look for. There are certain kind of basic things that we teach about understanding the market, understanding stocks, understanding your personal strategy. That's kind of what we're teaching you in level 2. So from that perspective, it will help you for sure. All right. All right. So I think I can wrap this video up now. Thank you guys. Hopefully this was helpful for you. I appreciate you all being here. How are the Woodcats shareholders doing? How are you guys feeling? It's the listed last Tuesday, so it's 1 week post listing, right? I didn't check to see where it traded today, but I think it went up as much as, let me check. So Woodcats, the IPO was 90 cents. Oh, this is an interesting chart. The chart is, it's pretty much back to IPO price, right? Jamaica Politics says they sold Woodcats for 15% gain. So you're the one who drove the price down. Back to IPO price, yes. The most I will go up to is 5, and I'm thinking to have less. I see NCB is having a new bond offer, but I'm not seeing any interviews on it. You're not likely to see any, sir. Yeah, so wow, it took a week. It took a week. Okay. I mean, I'll just say that, so further to what we're talking about before, different things drive prices in different seasons. And so it's certainly not the end of the road for them. You have to wait to see what other events or activities or reports or milestones may drive the price up for them in the future. So the stock price is something that moves up and down every day, right? So just understand that. Again, we spoke about Atlantic Hardware earlier that was trading below IPO price for months after listing, and then look at where they are now, right? So I would say if you bought into the IPO, make sure you'd have done your due diligence. and, you know, understand what the future may look like, and then you invest accordingly. All right. Tavares, how are you doing? Did you talk about the GOJ bonds being listed? No, I'm going to do that in a separate video. All right. Like the move in tropical after the battery storage news. Tropical battery. Okay. It's up 17% this month. So again, Mima bro, this is a perfect example, right? 17% up month to date, right? Capital gains. I mean, somebody said there was news about the battery storage. I haven't checked it out, so there you go, right? So different things move different stocks, right? So hopefully that one also makes the point. All right. All right, everyone, enjoy the rest of your day. Please, if you have stayed from start to finish, please give this video a like, share this with somebody who, so I did this video as well for those persons who have money in their savings account and it's gathering dust, right? So that person who, you know, you've been trying to talk to them about investing, they're like, investing doesn't make sense and so on and so forth. Show them this video as to how they can make at least 100,000 in dividends. Now, I'm not guaranteeing anything, but send this to them, share this with them, family, friends, co-workers, students, teachers, grandparents, you know, other relatives and friends, right? So share this video for us. Like this video if you found value in it. And if you have not joined our level 1 community as yet and taken our level 1 course, then you can sign up for that now at learngrowinvestclub.com. And then I think that's it, right? Is TJH planning to pay more than 2 dividends per year? I do not know. We got to ask them. I think their AGM is coming up. You can ask them there. If they're having their AGM or investor briefing, I will likely be there. So I can ask on your behalf, but I don't know. All right. All right. Take care, everyone. See you in the next one. You've always heard that you need to invest, but you don't know where to begin.
Don't worry, leave that to us. We've been teaching people how to invest for the last 8 years and have helped over 45,000 people get started with investing in a simple way. And now we've made the process even easier by creating a course that teaches you how to get started investing in 5 simple steps. And it's called our L.E.A.R.N method.
Before you invest, you need to 1, look at your financial position. 2, establish your personal goals. 3, assess your investment options. 4, research the best options for you. And 5, normalize investing regularly.
With these 5 easy steps, you can start your investment journey with confidence and clarity. But wait, there's more. We've created templates and resources to help you take action right away. After this course, you will know how much you have to invest, your investment targets and timelines, and how to invest to achieve your goals. Register now at learngrowinvestclub.com.